Welcome to the August 28th, 2023 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. Thank you for tuning in this week. I'm Spencer McGowan, your financial weatherman with your fast-paced tour of the global financial markets. This YouTube update is designed for our clients by McGowanGroup Wealth Management. I'm President, McGowanGroup Wealth Management. A team of 10, a team that cares. Actually producing this show as the update to help our clients make great decisions by understanding the headlines of the week. Let's start with the Dow Jones Industrial Average. In the month of August, this is the Dow year to date, there's the March implosion with the banking crisis. Here is a 52-week high in the Dow, 35,600, and the Dow's come down about 4% in the month of August. So I titled the program, Hot Summer Gets Hotter. Wow, why did the Dow wilt in the month of August? It's because the economy got hotter. Here we go. This is the Atlanta Fed. Their updated GDP estimate for this quarter, and this has been the most important update for us over the past 18 months when you were hearing looming recession and it was not true, and Atlanta Fed told us right here on McGowan Group YouTube when we put it up on the screen each week. 5.9% GDP growth. There's only one year in modern history where the GDP growth was 6% for a whole year. It was back in 1984 after the Reagan deregulation and tax cuts. But wow, 5.9%. It is not a recession as the economists were predicting here. So some of what happens in YouTube McGowan Group and the way we manage portfolios at McGowan Group Wealth Management, you actually have to look at what's happening right now as opposed to just taking all those headlines which may or may not be true. What is this? This is essentially the Fed funds rate. This is actually the T-bill rate, which follows the Fed funds rate. You could see that Jerome Powell and the Fed have increased interest rates dramatically, a historic, quick-paced increase because they wanted to squash inflation. Well, that's the highest since 2007, and it actually topped that a little bit this week as Jerome Powell spoke at the Jackson Hole Conference once a year. You know why the Fed does the conference at Jackson Hole? Because Volcker, one of the prior Fed chairmen, actually liked to fly fish, and they all liked it, so they got to do it on the Fed's money, so they like to fly fish. That's why they go there. In his speech, he said we may need to increase even further. But at the same time, if you read the Fed's own projections, by 2026, this rate, the cash rates, if you will, like the Vanguard money market, yields about 5.3. They're going to take that yield down to about 2.5 according to their own projections, because inflation is already about 3%, maybe even less. That big wage growth for new hires has disappeared, and they're starting to see lower offers for new hires this year, taking some of the pressure off of inflation. How realistic is the Fed target to get inflation down to 2%? Well, we went back, there's 110 years of inflation data. You could see it was a lot more volatile, including the Great Depression right here. That's deflation. This is high inflation. This was World War II inflation. Here is the 1980s, late 70s inflation, driven by overregulation and excessive fiscal spending, especially at the end of the 70s. And you could see the impact here of excessive fiscal spending and overregulation. Federal Reserve raises the rates, you get back to a much more normal 3 to 3% CPI, likely on its way to maybe 2.5. But the Fed target is 2. And you can see that's a pretty rare, 2% is actually pretty rare if we go back any reasonable length of time, because this average is 3.3%. So will the Fed crush the economy in pursuit of their goal and maybe even overshoot the mark? Deflation, that would be a contracting economy. That's one of the leading questions as Jerome Powell continues his rhetoric. But if the Fed projections are correct, it's a magic carpet ride for high cash flow assets like the energy infrastructure, like the global high yield. And we would love to build portfolios for you in energy infrastructure and global high yield. Lots of cash flow and potentially rising cash flow in the case of energy. What happened this week? Wow, this is the Dick's Sporting Goods, Foot Locker, and Peloton. They all went down about 30% this week. The retailers, which is Foot Locker and Dick's Sporting Goods, cited rampant theft as one of their costs. And so that's just an interesting implosion this week in some of the retail athletic stocks. Here, what's working over the last 90 days and what's not working? We've got Carnival Cruise Lines. Everybody's going on cruises. Digital Realty Trust, the data center REIT that has actually had a huge decrease early in the year. Now it's up 37% in 90 days. Boston Properties, that surprised me too. 36%. Adobe up 33% in the last 90 days. Marathon Petroleum up 32%. At the bottom of the list, Dollar General. That could be the rampant theft issue when showing up in those numbers. And then you have Estee Lauder and a few other companies like Campbell Soup. But the question is, we can spot trends, and here there's hope for the REITs. Some REITs we may enter at the end of the year with tactical cash, and some we're going to wait, like office or multifamily, we'll wait to add those allocations likely at the end of 24. I'm Spencer McGowan. McGowanGroup Wealth Management serves affluent families right from the Crescent in Dallas. Find us at networthradio.com to set up your brainstorming session. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.